please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. Actually, we picked up those bites with a reason, and I'll come to it in a second. At the moment, of course, the US volatility seems to continue, and that will remain an overhang on global markets. But we have two positives. One, that Asia is in the green, but much more important for us, crude has gone way towards the $60 mark, and with good reason, not because of volatility or risk aversion, simply because the stocks are much higher than what was expected. The Department of Energy releases indicated. So this is going to be extremely positive, and as if this was not enough, wonder of wonders, surprise of surprise, the monetary policy was actually equity markets positive. It was extremely dovish in its tone, and therefore, and unexpectedly so, because we all thought it will be a new hawkish stance, but a pause, hawkish pause. But although they delineated all the dangers for inflation, they seem to indicate that even if I see 5%, 5 to 5.6 inflation throughout 2018, because I'm going to get a 4.5 at the end of it, I'm okay with it. That was the overall tone, and that's going to be very positive for equity markets in general, NBFCs in particular, but banks unfortunately will not be able to participate. Yesterday, the biggest blow, and Anuj, we missed you at that time, came in the Nifty Bank because of this, what Mr. Mundra said in our montage, that the base rate is going to be harmonized with the MCLR. Yes. So immediately there is a margin crunch because they will have to lower some of their lending rates. But otherwise, this is a equity market positive, bond market positive policy.
Okay, so at least that's one thing out of the way. Lata, morning, Anuj, morning. But something in the fabric of the market has changed, right?
Yes, of course.
Yesterday we saw that even a minor recovery was sold into. The recovery was so feeble. And a lot of large cap stocks came under pressure yesterday. You spoke about HDFC Bank, but L&T, TCS, HUL all closed in the red. Anuj, morning. It seems like we're not out of the woods just yet because of the volatility that we're seeing globally. Is that the sense you're getting as well?
Yes, morning Sonia, morning Lata. Okay, first things first, this is a correction phase in a bull market, and after a long time that we are seeing that. Yesterday's close was quite disappointing for the bulls. That point should be hammered home. When you have gap ups that get sold into, that's not a good sign. So what the market wants is actually, for example, today it's only 40-point gap. If it was another 70, 80 or 90 point, as it looked like at one point in the morning, especially overnight when the US market was doing well, it was sure enough indicator that that would have been sold into. Today could be slightly tricky because you have crude also, which is lower. Exactly. So for me, the key point right now is, as of now, we haven't broken 10,500 decisively. Yes, we are trading below that, but we haven't broken it decisively. Breaking it decisively would mean you go to 10,350 thereabout. A decisive break, if it happens, which is that we give up the lows of the last 2 or 3 days, could pave the way for 200-day moving average test, which right now is 10,030 thereabout, but is rising 200-day moving average, so 10,100 thereabout could happen. This selling that you're seeing from FIIs is quite aggressive, and that too in HDFC twins. The sense I get is that this is maybe 2 or 3 large FIIs just taking home profit and just selling these two stocks. HDFC is down 10%, HDFC Bank is down 7% from highs. It won't happen unless there's aggressive selling from large institutions. Also, if you look at the index futures number, there's been unwinding of 14,000 longs and addition of 8,000 shorts. Index options, there's aggressive call writing and put buying by FIIs. The point I'm making is positioning right now from smart money is towards a sell on rally market. This is out of the window if yesterday's high of 10,614 is taken out. But normally what happens in a market is that you do make a bottom, then you rally, and then you see that bottom is durable or not. You make a sort of a double bottom. So good stocks are rallying, that's a good point, but the market is still a bit vulnerable to second round of decline. The way US market closed yesterday after a 500-point intraday rally is telling you that volatility is not over, and high volatility is not a friend of bulls. That point should be taken home. Today, of course, because crude is positive, I don't know if the market latches to that or does the market latches on to the volatility in the US market? I think we'll find out in the first hour of trade itself.
Yeah, you may have seen the mutual fund numbers for January. Even that is 15,000 crore compared to 20,000 crores that we got in some months in December. Now, February will become very interesting. If people are genuinely beginning to think that the returns from equity are not quite matching or not way above the returns from debt. So, that will be another factor that will be a kind of a medium-term headwind for the market. But that number is still not known.
That number is still not known, of course, and we'll find out. But, also what this correction has done is that it's brought risk to the table. Now investors are aware that in equity markets there's risk as well. I think we went through a period where everything just went up, and you started to think, you started to think that there's absolutely zero risk in equities, which is not the case. Obviously there's risk, and the complacency is out. I think excesses are being taken out. A lot of mid caps and small caps in this correction will go to levels from where they will not recover, and the ones which had a nonsensical rally last year. So that I think is going to be a good point.
And now we have a lot of opinion coming in on the markets, being under pressure. We heard it from Jonathan Garner yesterday, and today from Ruchir Sharma, who says that the trend will be lower in the next 12 to 18 months. But of course, as we know, markets make opinion and not the other way around. But let's take a look at what our wise experts have to say as we head into trade this Thursday morning. Anish Damania of IDFC Securities expects an accelerated growth path for the Indian economy FY19 onwards. He says their stance further finds support from better than expected ongoing Q3 earnings season. He says the current dip seems a healthy correction and makes him re-emphasize buying on such dips. He reiterates their March 2018 Nifty target of 11,300. The IDFC top buys include Maruti Suzuki, ICICI Bank, Motherson Sumi, HPCL, Hindalco, Aurobindo Pharma, Bharat Electronics and Ashok Leyland. He adds their small and mid-cap top buys include Kajaria Ceramics, SpiceJet, Ashoka Buildcon and Greenply Industries.
Okay. Well, money market views somewhat important today. Mohan Shenoy of Kotak Mahindra Bank says the dollar recovered from its lows on robust data and resolution of debt ceiling, and crude oil prices are sharply lower. He says unexpected inflation concerns seem to be having an impact on asset prices globally. Mr. Shenoy says the rupee weathered the post-budget Indian equity sell-off, aided in part by lower crude prices. He expects the USD INR to trade in a range of 64.10, 64.40. But actually, I'll watch more for what Shenoy has to say on bonds. Mohan Shenoy says the RBI MPC maintained a status quo and neutral stance while being cautious on inflation. He says the borrowing calendar for FY18 comes to a close with the last auction of G-Secs tomorrow. He expects the 10-year benchmark bond yield to trade in a range of 7.5 to 7.55 for the day. The important point is it rallied about 8 basis points yesterday. It could rally another 2 to 3 basis points today as well. So generally, the indication will be positive.
Okay, let's talk about the global markets then. Here's Nigel with the world view.
Well, we ended in the red in yesterday's trading session. If you just take a look at it, both the Nasdaq as well as the S&P 500, both of them ended with a cut of more than 0.5% approximately. It was a day of reversals. The Dow, in fact, saw the biggest reversal that we have seen all the way since August 2015. In fact, it came off close to around 400 points from the day's high. The S&P 500 as well, that saw the biggest reversal we have seen since February 2016. Why did the Nasdaq underperform? Well, a couple of heavyweights were there. They did see some selling pressure. So Facebook, Amazon, as well as Alphabet, all of them were under some pressure in trade yesterday. What returned yesterday was the spike that we saw in the yields as well. So the US bond yield, that moved up to around 2.85% intraday. Now, why did that happen? One factor was that, in fact, Senate Majority Leader, in fact, Mitch McConnell, he said that they've reached a deal, but that would increase the spending by nearly around $300 billion. So that's what, in fact, gave rise to a bit of a spike in the bond yields. Chicago Fed President Charles Evans said that no rate hikes will be there till mid-2018. So that was in terms of Fed speak. Shifting focus to Europe, though, we saw the CAC, the DAX and the FTSE, all of them bounced up in trade yesterday. Remember, for the month, they're still down between around 1.5% to around 2%. But yesterday, they ended well in the green. Today, we'll be focusing on UK's monetary policy. The pound is going to be in focus. It strengthened close to around 4% in 2018. So we'll keep an eye on that factor. The peripheral indices as well did well, whether it was the Italian, whether it was the Portuguese or the Spanish index, all of them ended in the green. Asia this morning is looking quite good. Most of those markets trading in the green, barring the Shanghai. The SGX Nifty, though, is indicating a 45-point bump up just to kickstart trade. Back to you.
That's good to hear. Thank you very much, Nigel, for that. Well, we have to get into a break. Let us leave you with one opinion we got from CNBC. Ruchir Sharma of Morgan Stanley spoke to CNBC, and he thinks that the bull market is in the process of forming a top.
Well, I think that this bull market is basically in the process of forming a top. And I think that this is the first crack of it. And bull market tops tend to be a process, not an event. And I think that the reason why this is likely to play out this year is that the trifecta which has been driving global stocks over the last 12 to 18 months as a big sort of tailwind is now bound to turn into a headwind. I do feel over the next 12 to 18 months, we are directionally lower.
Directionally lower,
yes,
okay.
But it's very hard to call whether this is the actual start of it or this is just the start of a process, because usually at the start of a sort of turnaround, you have a lot of back and forth which happens between opposing forces. The trifecta which has driven global markets so powerfully over the last 12 to 18 months is coming to an end, in fact, turning for the worse. What's the trifecta? We have had growth surprising on the upside, inflation during that period consistently surprising on the downside, and of course, we have had very cheap money from global central banks with the Fed sort of tapering down, but you have the ECB and the BOJ, which have been very accommodative, and even the Central Bank of China. It's unlikely that global growth from here, including US growth, is going to accelerate much from here. In fact, I think that in the second half, we're going to likely to see global growth disappoint. The biggest sort of thing that we haven't internalized as yet is the fact that there's a big demographic challenge in the world, which is the fact that look at the US and look at everywhere else. The unemployment rates in many countries today is at a 40-year low. And the US keeps adding jobs at 200,000 a month. We're going to have an unemployment rate at 3.5% or lower by the end of the year. That sort of unemployment rate has never been sustained, or you end up getting massive wage increases at that sort of inflection point. Emerging markets are still 10% below their all-time highs, despite this massive run that they've had over the last 18 months or so. The US, compared to where it was in 2007, is about 60% above that level. So on a daily basis, the correlations appear to be very high, but over time, you end up getting these differences.
Okay, so that's a civilizational call that Ruchir is making, that demography is going to keep growth lower. There are just fewer people working in the United States. But let's come back to a trigger that might continue to have a positive impact on India today. The Reserve Bank's monetary policy, it kept rates unchanged. It sounded overall dovish. Bond yields fell by about 8 basis points yesterday after the announcement of the policy. Vivek Rajpal, the rate strategist at Nomura India, joins us on the phone line with a stake. Vivek, a fairly decent rally in bonds after a long time in India. Is there more of it?
Hi, Lata. Yes. I don't think actually RBI was dovish, as you mentioned earlier. RBI was hawkish, but it was definitely less hawkish than what markets was pricing in or what markets feared. Most importantly, it kept its stance neutral. And there were some fears in the market that they may change their stance from neutral to tightening mode. So that provided relief. Now the question is whether this relief will continue, whether the bond rally will continue. I think it will continue because of two reasons. Number one, clearly we will see extension of what we observed yesterday. And number two, I think overnight the fall in oil prices also should support India bonds today. So, yeah, we may see extension of the rally that we observed yesterday.
Okay. Vivek, hi, good morning. What's your view on what the RBI could do henceforth, though? Do you think a shift to tighten rates requires further evidence in a build-up of inflationary pressures?
So, yes, that's how they sounded. In fact, I think there was a mention on commodity prices, for example, especially oil prices. They mentioned that it can move in both directions. And number two, at least I was watching very keenly what do they say on the minimum support prices. And clearly it looks like they want to wait and see how the MSP prices, the potential MSP prices take place. And based on that, they would rather then decide on the inflation outlook. At this stage, reading statement and listening to the post-policy conference, I think it's a reasonable assumption that they will remain on a prolonged pause, at least for coming 3-4 months.
So you'll see the new 10-year between what levels? 7.5 to 7.5, or does it go even below 7.5?
Well, at this juncture, it clearly looks like the highs in the bond yields that we observed after budget announcement will hold. On the downside, I think because bonds have sold off so much, I think even 740 is quite likely.
All right.
But then, to be frank, Lata, that's just like 10-15 basis points, and given the realized volatility in bond markets, it's in a possible realm of things. But overall, I think 745 centric is where we should probably stay.
This morning, the Asian markets are doing just about okay. The Hong Kong market, in fact, has picked up. The SGX Nifty is petered off a bit, but it's still holding on the green line. And Nikkei, too, is up about 0.2%. Let's see. We've been seeing a lot of volatility lately. Hopefully, sanity should prevail. But our research team is here to give you the list of top 10 stocks to watch as we head into trade this Thursday morning. Anuj, what are you looking at today?
So, Sonia, for first up, this SGX Nifty, if you see the downtake, that's actually good news for the bulls, because if it was, if it was starting at 10,550, 560, that would have been sold into. Now, even the bears would think whether they want to sell or not. Today's weekly options expiry as well on the Bank Nifty. In terms of stocks, I think Ashok Leyland has just shown you that, even in a weak market, if you just focus on some companies which have been remarkable, you can still make money. It made an all-time high yesterday, and in a volatile market, very strong delivery buying as well. So that's my first stock to watch. And I think crude oil is clearly going to be the theme today. So you can trade via OMCs, paints, aviation, perhaps Asian Paints. Trading below the 200-day moving average has absorbed some selling. So let's see if this one can lead the pack.
All right. That's important, of course, for us. It's always a big boost, crude prices. Ekta, you have a couple of numbers, Oro as well as, of course, Taro's numbers as well.
Yes, absolutely, Lata. For Taro, it was a really disappointing quarter this time round. There is pricing pressure, which the management has alluded to, which has resulted in the performance that we've seen for Taro this quarter. So we are expecting the margins, which came in at around 39%, to affect the Sun Pharma stock in today's trading session. Remember, Sun comes out with its numbers on the 14th of Feb, and hence it will pressure the stock today. Separately, Aurobindo, largely an inline set of numbers. US markets grew 9% year-on-year, but declined sequentially as was expected. Margins at 23%. The call is at 8:30 a.m., so commentary will be quite important. Debt figures came down as well, so that's positive for Aurobindo.
Okay, thanks a lot for that. We will find out more from the management at 8:30 a.m. But in the meantime, how are the banks, the NBFCs and MFIs going to react? Are they going to react after the policy yesterday? Lata, what's your take?
Yeah, I mean, like I told you, and like Vivek was telling us, now the yield can even go towards 7.4. Maybe that's too much, maybe 7.45. But the point is, as the cost of money falls, at least temporarily, there will be a minor relief for NBFC stocks, which got hammered when the yields went all the way to 7.6 and 7.7. So positive for NBFCs. The other rule that came out is that foreign banks now have to meet their priority sector needs. This was known. Foreign banks with more than 20 branches will be treated as Indian banks. So that's Citi, Stancy and HSBC, which means they have to have that 8% of their, off-market balance sheet books for marginal farmers and for MSMEs. They definitely don't have the branch power to reach out to MSMEs and farmers, so they will buy loans from the MMFSLs or the Ujjivans or the Equitas or the Bharat Financial. So good for those MFI stocks. Only banks will not participate in this yield party because they have this problem that they may have to bring down some of their lending rates. So not banks, perhaps a little more red, but positive for NBFCs, MFIs.
Okay, let's see how these stocks react. A lot of infrastructure and power companies numbers yesterday. Anisha, a bit of a mixed bag?
Well, yes, Anuj, actually, to be honest, towards the end of the season, I usually have some culprits in my bag. But today, most of the companies have reported good set of numbers. RB Infrastructure, well, I'm calling it a mixed set because the margins and the top line depleted a bit. But brokerages like CLSA are very bullish. They've raised the EPS estimates with 20 to 40%. Now, in terms of the numbers, the profit was higher just because of the higher other income and lower finance costs. But the margins came down to 48.6% versus an expectation of around 52%. But the management commentary for Q4 is very strong. They say it will be a stupendous Q4, and that's the reason the stock should hold up in the green. It was a stupendous Q3 for Torrent Power as well because the profits nearly doubled, came in at around 205 crores, the revenue ahead of expectations, and even the margins came in at 28.6% versus an expectation of around 27%. That should definitely be in the green. Moving on to Kalpataru Power and JMC Projects, they reported good set of numbers, both reporting 20-30% growth both in top line as well as bottom line. Lastly, on Dixon as well, the net profit grew by 23%. EBITDA margin also expanded by 600 basis points. Definitely a green on that one as well.
Stupendous, Anisha. The last week of results is still with us, and that's when all the culprits come. So let's just hold our horses. Well, back to Ekta. You have some takeaways from the Cipla conference call?
Well, yes, Lata, you know, I expect Cipla to probably see some amount of upside today. The margins, in fact, were at a 10-quarter high this time round, and they have said that there will be one limited competition launch, which we will probably see in the next couple of months, probably Q4 or Q1 of FY19. Plus, they expect the US margin improvement to take place in FY19 as well. So, all in all, compared to its peers, there's definitely much better guidance coming in from Cipla.
Okay, much better guidance from Cipla. You know what? This time the IT numbers have also been good. Hexaware, let's find out. Naveen is with us. Naveen, Hexaware had a good showing this time?
I would say, Sonia, it's bang in line with what the street was expecting. So on a consolidated level, beginning with revenues, tad above what the street was expecting. We were expecting a revenue of around that $153 million mark, a growth of less than 1%. But that came in around 1.3% at around that 156 million mark. So this was above the street expectation. But margins have come in at around 15.8% versus an expected 16.6%. This is majorly because of an increase in employment expenses. I spoke to a few analysts. They believe that this is more or less a one-time, and going ahead, the margins will stabilize. But overall, I expect the stock to be in light green today.
Okay. Well, Naveen, have you picked up anything from the market on Cognizant at all?
So yesterday, Lata, post-market as Cognizant came out with their numbers. What we understand is it's fairly neutral for the Indian IT players. So two to three key things what the result highlighted. One is that they have been able to maintain the full year guidance of around the 10% mark for CY17. Going ahead, the guidance that the company has given is between 8 to 10% revenue growth for the coming year. So that is fairly neutral. That is what the analysts are saying. What they believe is if it was less than 8%, that would have been a big damper. So this is fairly neutral. On the other hand, in terms of the numbers for Q4, revenue growth at 1.6 is bang in line with what the street was expecting. So they believe that for the Indian companies, more or less it will be neutral, but nevertheless expect the green on Indian stocks also on the back of this. Actually.
Okay, Nigel, thanks a lot for that. Nigel, what about Dalmia Bharat's numbers?
Sure, those numbers looked good, and we're going with green because the sales volume growth was better than what the street was working with. It's a 17% growth given the current environment. That looks good. Margins did compress by close to 200 basis points, but that was on expected lines because pet coke prices had spiked up, slag prices as well had spiked up. So that was on expected lines. Now remember, the variable costs did jump up, but the fixed costs came in lower because of operating leverage playing in. What works in their favor is they're repaying debt every quarter. Nearly 220, 250 crores are being repaid. So that's point number one. And the second point is the stock has corrected nearly 18% from the recent peak. So most of the bad news could be factored in. In addition to that, they're looking at inorganic growth as well. The street likes all of that, I guess, and the stock should open up in the green.
Yes, who doesn't like M&A talk, right? Thanks, Nigel, for that. But Prestige Estates is also in focus, not just because of the numbers, but because of that deal, Sonal?
Yeah, actually, Sonia, the numbers were not that great. Nothing special about the numbers. The revenue was up 3%. The EBITDA came in high by 11%. But the profits fell down by 3%. But what really would be liked by the street are the collections, which were at a multi-quarter high and were up 23% on a yearly basis. Even the new sales value was up 56% year on year. The realizations, they came in around 6,800 rupees per square feet mark. But the other important thing is that they achieved 82% of their total turnover guidance. And in terms of new sales value, the guidance achieved was at around 52%. And you were talking about the deal, so they have entered with a strategic partnership with HDFC Capital Advisors Limited to the tune of 2,500 crore rupees. And in terms of turnover, they expect to garner around 10,000 crore rupees. So expect the stock to be in green today.
Okay, thanks a lot for that, Sonal. And to wrap up the results of the day or of yesterday, Ronit?
Yeah, so a lot of results on my radar. I'll first start with SRF. You know, the stock has been a relative underperformer, but a good set of numbers coming in. Revenue was up 23%. Margin, a slight downtake, largely due to higher other expenses, but the PAT, that was up by 21%. Moving on to IGL, revenue up 5%, but the volume growth, that came around 14% higher. The EBITDA as well as the margins were impacted largely due to higher gas prices, and the PAT, that was up by 15%. Moving on to Godrej Activate, good set of numbers coming. You know, revenue up 7%, margins a slight downtick, but the gross margins, they expanded by 220 basis points, and the PAT, that was lower largely due to lower other income. Finally, moving on to ICRA, you know, strong improvement in operational efficiencies. You can see that the total income was up by 8%, but the operating expenses, that were down by 26%, and the PAT, that was up by 63%. And finally, Gati, you know, weak set of numbers coming in. Revenue up only by 5%, the EBITDA, that was down by 21%, and the profit, that was down by 26%. Expect that stock to be in the red today.
Okay, guys, thanks for all of those numbers and the stocks. So here's a quick recap of our top stocks to watch today. Stocks expected to gain: Ashok Leyland, Asian Paints, IRB Infra, Torrent Power, Cipla, HDFC, Bajaj Finance, Indiabulls Housing, Bharat Financial, Ujjivan, Hexaware, Dalmia Bharat, Prestige Estates, Kalpataru Power, GMC Projects, Dixon Technology, SRF, IGL, Godrej Agrovet, Infosys, TCS. Okay, this list is long. HCL Tech and Wipro. Do watch out for pressure in the Nifty Bank, the PSU Bank Index, Sun Pharma, ICRA and Gati.